Welcome to day 14 of our 50-day learning series for Indian stock market beginners. Today, we're going to pull back the curtain on a hidden force that really separates the pros from the amateurs.
Okay, picture this. You're looking at your screen and you see two different stocks. Both of them are up a solid 2%. On the surface, they look exactly the same.
The first stock, well, it keeps on climbing. The move has real strength, real power behind it, and it ends up rewarding everyone who bought in.
But that second stock, it hits that 2% mark, looks like it's about to take off, and then it just fizzles out and reverses, trapping all the hopeful buyers. It was a total fake out.
So, how on earth do you tell the difference between the real deal and the trap? Well, there's a hidden signal at play, a force that can give you a massive edge if you know how to read it.
And that signal is volume. It's the secret ingredient that most beginners completely ignore, and today we're going to make it your new best friend on the charts.
Yesterday, we talked all about those super frustrating fake breakouts. Well, today, we're adding the single most important filter to help you spot them before they can trap you. Think of it like this. Price tells you what is happening. You know, a car is moving forward. Simple enough. But volume tells you how strong that move is. It's the fuel in the tank. Is this just a quick little sprint, or is it the start of a long road trip? If you only remember one thing from today's session, please let it be this. Price is simply the move you see on your screen. But volume is the conviction behind that move.
So what exactly is volume? It's actually incredibly simple. It's just the number of shares being bought and sold in a certain amount of time. High volume means lots of people are getting involved. Think big institutions, active traders, the whole shebang. Low volume means the market's kind of quiet, with fewer people participating.
Okay, so now let's look at what happens when you combine price action with volume. This is where you start to unlock a much clearer, a much more honest picture of what's really going on in the market. All right, this is the healthiest sign you could possibly hope to see for an uptrend. When the price is rising and the volume is high, it means the big players are buying with conviction. There's real power and broad participation fueling this move.
And the opposite is just as powerful a signal. If you see the price dropping on high volume, it means there's strong selling pressure. This isn't just a little dip, there is real conviction from the sellers. It's a clear warning sign. Do not try to fight this trend.
Now this is a classic trap. You see the price going up and you get that little pang of excitement. But if you look down at the volume and it's low, be super cautious. A rally without that crowd support can fail, and it can fail very, very quickly.
See, a price move can be easily manipulated, or it might just be some temporary market noise. But high volume, that shows you that real money and real decisions are being made. It adds this crucial layer of truth to whatever you're seeing on the chart.
So let's connect this right back to what we learned yesterday. How does all this volume stuff help us solve that problem of fake breakouts? This is your breakout filter right here. A stock that breaks a key resistance level on low volume is practically screaming, this might be a trap. Why? Because there just aren't enough buyers to support that new higher price. But a breakout on high, sustained volume, that tells you the crowd is right there behind the move, giving it a much, much higher chance of success.
Let's try to put this all together. I want to give you a simple cheat sheet that you can reference anytime you're looking at a chart, just so you can quickly interpret what you're seeing.
The key thing here is to look at these combinations. High volume and price up, that's a green light. The trend is confirmed. High volume and price down, red light. Stay away. But check out that third one. High volume, but the price is going nowhere. That means a huge battle is happening between big buyers and big sellers. Someone's going to win, and the move that follows is usually going to be pretty powerful. Your job is to just wait and see who comes out on top.
So, after all of this, what is the one big takeaway? What's the one habit that should change how you look at charts from this day forward? It's all about developing a new mental habit. From now on, whenever you see a price move, your first question is obvious. Where is the price going? But you can't stop there. Your second immediate question has to be, who is participating? What is the volume telling me? And that's really the key. The market is just full of noise. You know, small moves and fake outs. Volume is your filter. It helps you ignore all that noise and focus your capital and your attention only on the moves that have real, genuine conviction behind them. By simply adding volume to your analysis, you are already putting yourself way ahead of most retail traders out there.
They're just watching the ball, the price. You're watching the ball and how many players are on the field. You're playing a completely different game.
So, a final question for you to think about. Be honest with yourself. When you pull up a chart, do your eyes immediately go to those volume bars at the bottom, or have you just been focused on the price? Making this one tiny shift in your process can have a huge impact on your results.
And that's a wrap on volume. Join us tomorrow for day 15, where we're going to tackle one of the most confusing things for every beginner: gap ups and gap downs. We'll explore why markets suddenly jump overnight, and more importantly, what you're supposed to do about it. I'll see you then.